won't let you. I won't let you fade away. I won't let.
What's up, guys? Hope everyone is doing well. In this video, I'm going to be going over some updates for Bitcoin, but nonetheless, to go ahead and get it started here, I want to begin with this 4-day chart, and then I will resume my typical progression from going from the lower time frames to the higher time frames. But I want to start off with this chart specifically because I found it within the last week or so. I think it's a very intriguing contextual scenario that obviously has a conclusion. Whether or not that conclusion will take place is the big question. But what we can see here is going all the way back to the, zoom in a little bit more here, going all the way back to the, what we can see here, the accumulation zone of the 2015 here to really is the entire 2015 just about was the accumulation zone where we saw Bitcoin going sideways. Obviously then we saw the 2016, 17 bull run here, and towards the latter stage we can see what I have laid out here is this 5-staged move here towards the upside, where kind of roughly this middle portion here forms a rising wedge, which is typically a bearish pattern, and really for all intents and purposes it was bearish because shortly after this deviation above the resistance that we see here leading into the end of the move, the bear run of 2018 leading into early 2019 began. Now what we see here is, again, we see each of these moves here from 0 to 1, the first leg up, and then from 2 to 3, the second leg up, and then from 4 to 5 here we see that final leg. 4 to 5 can be broken down here into an A, B, C movement, where we see A here aligns with the third touch point of the resistance, then going down to pull back to the third touch point of the support, and then bouncing from here B, that is all the way up to C or 5, ending this overall scenario here that I have laid out. So just keep this structure here in mind, the 5 stages, the rising wedge, the 4 to 5 here being broken up into the A, B, C, and then this also kind of generally occurring towards the end of a bull run or a bull market. So if we go to the current bull run, which that last segment of price that I went over, the bull run that led into, and in that preceding bear run too as well, that led into the peak at around $19,000 to $20,000, I have plenty of times pointed out various structural similarities between the bear run we saw here most recent and the current bull run that Bitcoin is on, which I believe is going to go far higher than where it currently is. I believe at this point it could at least approximately 2x or higher, but there are a lot of similarities that I pointed out between here the current bear to bull run and also that previous instance of that bear to bull run from around 2013 to 2017, and also others I've seen pointed various similarities out as well. But so we see here a descending accumulation zone here at the end of the bear run, as opposed to the horizontal accumulation zone of the past instance that I went over from 2015. But here we can see kind of this, this one is, obviously you can see this pattern here, the 5 stages, the rising wedge here, here the A to B to the C, if that ends up playing out, if we see a quite precise repetition of this pattern, which I'll get to that in a moment. But here again, you can see all of the core things intact, but the major difference is that it is clearly extended in time. This is taking longer to play out over time than the past instance of this pattern in the scenario that I pointed out, but still, as I said, you can see the core aspects here. So if we see this play out quite precisely with respect to the prior instance of this scenario, we would see Bitcoin here, as it's been consolidating almost perfectly sideways for ever since it hit around $123,000, which I'll get to pointing that out here soon. But we can see here, if Bitcoin moves upwards in likeness to the A of the last scenario, we would see a move upwards towards, again, the third touch point of the resistance of the rising wedge, somewhere in proximity to $150,000, and then down to B, since that last scenario, whenever it moved all the way down in a rapid fashion. It was basically a V-shaped like recovery, but it moved down to the what was the support of that rising wedge, making the third touch point here, which would mean we would see Bitcoin potentially move from around 150,000 here at A down to around $110,000 in a rather quick fashion. And then obviously from then onwards, you would see a move up to C or 5, ending the overall pattern. Now, obviously, this, we could continue to see Bitcoin just gradually move upwards along 4 to 5, and we won't see the A to B correction. Maybe this isn't going to happen at all. I think it's quite striking that so far at this point, I mean, about, at least, I would say probably 80, 85, pushing 90% of this pattern has played out like that past instance that I've shown. So here to zoom out to kind of get a full view of both of these. Again, like I said, you can see that the main difference is the duration of time, which this is playing out. And we can see here that this first one was around 67 bars, around 268 days. This one here has been, obviously it depends upon when Bitcoin is going to top out and various other factors. But if it tops out sometime like around, let's say, like October, let's say late September, October, November, December, somewhere around 190 to 200 bars. So that would be over double an extension in time. And if we also, again, further zoom out here just to point out the projection of the peak, obviously the peak back here for this pattern went up to approximately 272. That's the projection for our current one, and that is also directly related to the final peak, the end of phase 1 of cycle 2 back in November 2013, where we see here this being phase 1. Here we see the extension of the 2.272 in proximities where the all-time high was with respect to the bear market. And we see the bear market to phase 2 of cycle 2 goes right back up to proximity 272. And we see cycle 3 here begin with phase 1, same bear market retracement. And so far at this point, we've hit the 1.618 right here, last bull run, just like happened right here. Then there is a retracement, and then a move up to the 272 in proximity. Once again, here we see a retracement, and then a potential anticipated move up to the 2.272. But so far at this point, we've met, obviously we see this first move here up to the 1.272 of this retracement of phase 1 of cycle 3, right here roughly. Found support along the 1.146, bounced up to proximity of the 1.618 here, moved up to around the 1.786 to 1.854 when Bitcoin hit around 112K, bobbed and weaved here, and now we're continuing to go higher. And the next major areas are going to be obviously this zone right here, which has been historically valid and accurate for the last 12 years or so, going all the way back to 2013. Now, again, resuming typical schedule and progress here, we're going to look here at the 4 hour. So yesterday was the FOMC meeting. The Fed chose to leave the interest rates unaltered. There was a short-lived, at least so far, who knows whether or not, Bitcoin's going to continue to go further here. At this point, if it goes further downwards, I don't think it's particularly because of the FOMC meeting and the particularly undesired news of unaltered interest rates. There was also the White House put out its first crypto report. It talked about various things. Chainlink was mentioned, and Chainlink was going down just like everything else was, within the rough, proximal temporal time frame that all this information was coming out. And, you had the typical complaints of how can Chainlink or anything, blockchain solution-wise be mentioned to such a fundamentally important degree, but yet we see it going down. That's just how the market works. The fundamentals is not, they're not always reflected, especially immediately so in the price. But here you can see we saw this FOMC wick here on Bitcoin. There's this descending, what was resistance zone so far. It's been flipped into support so far. The FOMC wick and candle close held that. We've seen a bounce back above that resistance zone. Also above here, the 50 EMA. I think that's quite important to hold at this point. We're seeing you can see here that the band here has been gradually compressing and converging in on that 50 EMA. So some pressure is being built up here. There's also the Bollinger bands as well are insanely compressed right now. So as we're seeing this consolidation period here where it's almost perfectly sideways with here on the 4 hour, you can see these two deviations towards the upside and the downside. And as you go to the 12 hour and the daily, you start to see this smooth out a bit, and we start to see that almost perfectly sideways consolidation. So again, really it's pointing to, we're going to see a break of this compression, and the volatility is going to swing upside or it's going to swing to the downside. Now if we look to the downside here on the 4 hour, we can see the most notable vector zones are going to be creating this range right here. So anywhere from around the current local lows around 115K all the way down to around 109.2 thousand. I have been eyeing around approximately 110K to 112K as a potential pullback zone, because it would be retesting the prior local. At this point, there were local peaks prior to going to $120,000. They were the all-time highs until further price discovery was met. The 800 estimated moving average also sits down here at around 105,000 or so. There's obviously much more vector zones on this lower time frame, but these right here I would say are the most notable for right now for a healthy pullback that could be potentially kind of like a V-shaped recovery towards the upside. And then below that, there's also the 800 EMA we could look out here for as well. At this point, just maintaining price action above 100K is very, very crucial, and even more so, very crucial to maintain above 110, 112K for various, technical reasons, also psychological reasons as well. But I would say the bottom of the barrel at this point on this lower time frame in the shorter to medium term would be 100K, and then obviously that secondary emphasis on around 110 to 112K. We can notice here that on the, again, with the 618 has been very important here on the 4-hour and generally the lower time frames. Whenever we see the RSI move above, we see these impulses here. Ever since the consolidation began back in July 14th, we've seen the 618 act as resistance. I believe whenever we start to see the RSI peak its head above that, continue towards like the 786 and 854, then we will likely see a move here back towards 120, 123K and potentially higher as well. Now, if we look here at the 12-hour, again, we'll start to see, again, almost borderline perfect straight sideways horizontal consolidation. We still see the deviations here to the upside and the downside. We're seeing the 50 EMA has been acting as support going all the way back to July 25th. The FOMC meeting day yesterday went to the 50 EMA. We're seeing the RSI with a relatively steep decline as the price is going sideways. So we could be seeing some exaggerated hidden bullish divergence here that could enact a further support towards the upside, further movement towards the upside. There's also this here as well where we can see there's a descending support or trend here, and then but looking at the price it's ascending. So again, we still see some more proper hidden bullish divergence there that could again enact some support here, further movement towards the upside. What I really want to point out here is if we look here, well actually, if we zoom out, if we look here at this converging symmetrical triangle that I pointed out on the ASO, we saw that as it began to break right here in this region, this is when Bitcoin here was going upwards towards 123K. And ever since then, this sideways consolidation that I've really been emphasizing, if we look at the ASO, look at how unbelievably, this is quite symmetrical, quite compressed. It's converging in on the 0 point, or rather the 50 value here. It's essentially a 0 point for all intents and purposes, but this is, again, we're seeing symmetrical convergence and compression. And on top of that, it's not like this instance where obviously this is, the same pattern to a greater scale, but this is insanely compressed and converged towards this 0 point. So again, like I mentioned, on that 4-hour, we're seeing that 50 EMA band converging and compressing in on itself. We're seeing the Bollinger bands also highly compressed. So there's a move coming, regardless of, obviously, maybe it's going to go up, maybe it'll go down. The vector zones here, again, this one correlates with the one I went over on the 4-hour. If we do see the price move down, we would likely see the 200 EMA come up and catch that price in order to act as support, potentially again in like a V-shaped recovery. There's also this vector zone down here. It stems all the way down to around 105,000 to 101,000. So I would say, again, this is also a horizontal zone here, that if we see something along these lines, this would be very crucial to hold on technical reasons and psychological reasons as well. And then obviously there's further ones downwards, but I'll forego going over those as I go to the higher time frames. So if we look here at the daily, again, first off, I want to point out this is the main thing. We see this uptrend here that's been held beginning going all the way back to the first week of April. First support point, second support point. We're heading into what could potentially be the third support point. We could temporarily lose it, a deviation down on the 50 EMA, find a bounce. Again, that could be related to a quick V-shape drawdown and then a subsequent V-shape recovery. We see the RSI again here descending. In fact, every single one of these indicators, the stock RSI descending, the MACD descending, the RVI descending, and the ASO descending while we're seeing the price here. And now that we're on the daily, if I zoom in, you can see here that this has been almost perfectly sideways. Some people were entertaining that this right here is a type of horizontal consolidating bull flag that would take it anywhere up to like 130, 140K, maybe 150K at highest or so, depending upon how you take the flagpole and project that price target. Yeah, so I think that there's obviously a lot of pressure being built up here. It's going to be released one way or the other. The daily, again, is further cementing a potential retest down to around 110K. Again, we see the same vector zones here that I pointed out, these two major ones here, again, with that 200 EMA coming up and potentially meeting this one, and that type of retracement that would respect this horizontal support here. Now zooming out here, we can see, if I go back, I want to point out the 13 EMA, which is the red estimated moving average here, this red line that you'll see. Whenever you really start to see each of these prior instances of volatility swings towards the upside for Bitcoin, you can see here that going back to September 2024 on Bitcoin is hitting around $52,000. You start to see Bitcoin kind of in this expansion phase where it's building up. It's intermingling with these EMAs here. It's finding support along the 50 EMA, but once it really starts to pick up, you can see here with these two instances, you see that this 13 EMA here acts as crucial support going all the way right here into this local peak of around 109,000. Afterwards, we saw that the 13 EMA was lost, which then led into the move here all the way down to 75K. We can see a very similar relationship here with the 13 EMA acting as support for this upswing of volatility after meeting 75K. If we go back to the second overall leg or impulse move of the overarching 5-stage move of how I've characterized the current Bitcoin bull run in past videos, we can see here again the 13 EMA, whenever the price really starts to pick up, that is what is held. You can see there was a major support right here leading into this move, and even going back further, again, you can see the same thing right here. There might be, like, for example, instances here where we see like a couple or so closes below, or even like right here where it was kind of straddling below it for a bit. But I mean, ultimately that 13 EMA is held for the most part during these upswing moves, and currently we can see that the price has been finding support along that same 13 EMA. Right now it's literally sitting right on top of it. Zoom in as much as I can. You can see the past candle close below it. The current candle is also, it's basically literally right on top of it right now. It's fluctuating to a tad bit completely below it, but you can zoom in as far as I can. Let's see. Yeah, I mean, literally you can see it's 13 EMA is going sideways. The candle is basically right on top of it. So at this point, like I said, we could see some deviations here to the zones I've pointed out, maybe something like this, maybe something like this, you know, however that's going to play out. And the specifics doesn't really matter, but I think those two zones are important to look out for. So I forgot to mention something. When I got to the daily, I wanted to talk about the Bitcoin ETFs and Ethereum ETFs specifically related to BlackRock. Just July, the Ethereum ETFs went live, and from the time frame of July 22nd to 28th, BlackRock purchased more than 1.2 billion in Ethereum, and during that same time frame, they purchased 267 million. Obviously, with the other ETFs surrounding, that number increases. So again, we're seeing obviously this trend of more mainstream outside of retail, which is institutional adoption, flooding into this market. Yet the prices, you know, a major complaint that you'll see people, or at least kind of reservation rather, that you'll see people go on about is like, it's, again, the fundamental landscape just looks so good. Continuing to see more and more adoption and integration, but yet this bull market has just been lackluster. It's been gradual. It's spent more time going sideways or downwards as opposed to, you know, the short-lived volatile upswings it's had. But again, really, I think that is a good thing. I think it kind of boils down to the fact that we're seeing Bitcoin mature. It doesn't have as much strength as it did in its younger days. You know, again, analogy I give is like whenever you're younger, you just have more vitality, and you know, as you get older, it's harder for you to do, you know, a lot of things you could do more easily when you're younger. Bitcoin's getting older. That's why it's not able to have these rapid parabolic upswings that you see in the price over, like if you go back here to 2011 to 2013, it's just almost straight up the entire time, especially for 2015, 2017. But if you look here at this current bull run, it's been gradual, it's been stair-stepping, unlike the vast majority of the time frames which these past bull runs happened in. But again, like I said, really, and something I actually ended the video off with is just having patience, discipline, and conviction in your investment, and really just sticking to it as a technology rather than as an investment vehicle where you're just trying to make a bunch of money, get rich quick, and get out, and not really stick here as a genuine adopter of a technological revolution that is just, I think going to blow people's minds as it really starts to get integrated more and more over the next 5, 10 years and longer. Look here at the 2-day again, we still see the sideways. We see the 13 EMA here. Again, the same relationship is going to hold here on the 2-day, but what I mainly want to point out here is this cross below on the RSI. This is happening basically at the same horizontal zone as what happened back here in May, late May, which led to this retracement here, which is around 12%. If we see another roughly 12% retracement or so, we would see a move down to the 50 EMA or so right here. So again, we would basically just see something along these lines where we'd see another move, and then ultimately support would be held. Again, that would line up with the around $110,000 range of testing these prior local peaks that I've mentioned. And we've yet to see, zooming out here on the 2-day, the RSI currently right here get above the 786. You can see here that every time it's done that or gotten close to it or touched it has been correlated with the most noteworthy moves so far. We have yet to see that, so it leads me to believe that we have yet to see the most volatile swing of the current leg up, which is overall the third leg of the overarching impulse. Now, if we move, well, actually, let me go back to the one thing I do want to point out here on the 2-day is if we see here the 200 EMA currently sits at 89,000, 88,000. You can see here that the 200 EMA has been major support various times so far. It's also correlated with this uptrend zone that has supported the entire bull market so far. So worst case scenario that still presents a bull case is that we see a pull down to this zone here, along with where the 200 EMA would likely be heading, and then from here on we see a bounce towards the upside. So I think that's the best, or rather the worst best case scenario. It still presents a bullish case that would very likely cause a lot of psychological turmoil in the space. Here, if you look at the weekly again, we see the M2 here in black above the Bitcoin price. And the most notable thing here is we see that right now the M2 here is having quite a steep pullback. It's or correction. It's the most steep so far since it began going up here. Plenty of times I've seen, as I've mentioned, you start to see here, like for example here, you see the M2 here, the global M2 that is, pull back, and it seems like it's finally done going up, but then it just picks itself back up. So let's say again, if this is currently where the M2 is going to top out at, then we could expect Bitcoin to top out sometime, just generally Q4, but sometime I would say probably like October, November at most likely. Because typically there's about a 2 or 3 so candle lag behind the peak of them too, which would put it somewhere around like late September at earliest, but probably a little bit more close to like October, November at latest. But like I said, generally Q4. Now, there's also the scenario of, let's say the global M2 has a steep drop. That might translate to Bitcoin having a steep drop down to the 50 EMA here on the weekly, which essentially acts as the 200 EMA that I pointed out on the daily, where we could see it potentially come down to as low as around, like, this one shows like 85 to 88K. So I mean, we could see again like another move down to the 50 EMA, find support, and then still continue higher, because you can see here the 50 EMA in the band has been a major support so far. So that's not a bad thing until it loses it. Also, let me get rid of these drawings here. Well, M2 is still there. All right. Anyways, so we can see here that I pointed out that people were pointing out this is like a double top recently. It could act as like an M pattern with an ascending resistance. If we lose this M neckline here, then we would see a pullback somewhere around to the degree of around like 30% or so to the downside, which would take the price to like somewhere around like, give a broader range of 50 to 60K. So If that happens, then I will probably start to be in the bull market is over, but that does not literally, it literally doesn't matter until we start to see weekly candle closes, maybe even stemming down the daily candle closes below around $79,000 or so. Lastly here, I want to point out the resistance here on the RVI. You can see that it's been acting as resistance since March of last year. So over a year at this point, this has been resistance. We can see with the recent move up to around 123K, there was an approximate resistance found. But again, my bias is we're going to see this break and we'll see Bitcoin continue to go higher, but only time will tell what is going to happen there in that department. But if we move on here to the weekly, another weekly chart, I want to use this chart to point out one. If we look here at this weekly RSI, it's a different RSI, or rather, the past one was an RVI. Wait, was it an RVI? I think I might be mistaken. No, my bad. This is not an RVI. It's just because I use the same purple one. This is an RVI with Bollinger Bands, or my bad. This is an RSI with Bollinger Bands. And this here is also an RSI. These are two different RSI indicators. And if we use this, looking here at this RSI indicator using the Fibonacci candles, we can see that this resistance here is already broken. But with this past one here, this different RSI, using the traditional candlesticks on the price that it hasn't broken yet. So there's some ambiguity there. Fibonacci's with this RSI says it's broken. You know, obviously that the other RSI with the traditional candlesticks has not broken yet. But what I want to point out here is we can see each of these Fibonacci retracements that I have here of the first leg, bullish leg of the bull run, second leg of the bullish, second bullish leg of the bull run. We see here this first retracement of this first sideways consolidation, second retracement of this second sideways consolidation. You can see here that it points out these zones here. This one here is going to be with the 2.236 to 2.32. This one here, the 4.236 to the 4.32. So it creates a range of, really it's basing in on, or centering in on rather, to the 236 to 382, whether or not it's the 2x of that or the 4x of that. But what we can see here is carrying this out with this retracement here, and or rather this extension here and this extension here, we can see that projects a range of around 275 to 290,000 for the upcoming all-time high if this pattern of Fibonacci extension is met according to the overall structure of the bullish legs within the overarching 5-stage impulse that I pointed out. And then also what I find interesting is if you look here at this one, the 4.236 to the 4.382 has also just happens to align with the 2.236 to the 2.382 of this extension here of a drawdown. So this seems to be, like I said, an importance along the scaling of the 236 to 382 here, which this actually extends the potential all-time high up to around like $327,000. So this is projecting anywhere from around 273 to around $327,000 if that pattern is upheld going into the rest of the current move towards the upside. Now, I think that the lower half of that range, somewhere around like $220,000, give or take like $20,000, is more reasonable. I don't particularly lean towards the 300K or higher price targets, but it definitely could happen. Now, I believe that was... So if we look here at the weekly, another weekly chart, what I want to point out here on this chart is the... if we look here, zooming into March of 2024 up to the current time period, we can see here that there is this resistance here. We'll note this resistance here. Those get broken. But what's interesting about this is that if you look here at this buildup that led into this release of volatility, if I were to take a bar pattern of this and then place it correspondingly so like this one and then stretch it out to fit, you can see that it's basically, it's for all intents, it's essentially showing the exact same type of price progression. What we're seeing here, and what I noticed the other day is this initial build up, and then we see kind of this upwards poised rising wedge-like consolidation that eventually has a deviation towards the upside, which is, this is almost like a another formation of what I went over on that 4-day chart at the beginning of the video, where we see again this initial move up, and then we see this kind of upwards poised rising wedge type consolidation, which is typically bearish, but then there's that deviation or fake out above it, and then it finally goes into a bear market. So we could be seeing something along these lines. What is also interesting is if we look here at this first pullback in this overall pattern, it was 2 bars. This one here was 4 bars. This one here was also 2 bars, and right now we're on the 3rd bar, or the 3rd candle. So extrapolating out the pattern of, going from 2 to 4, a doubling. It also roughly, this one here was around 3 bars, and then this move here was also 6 to 7 bars. So I mean, essentially we're seeing that this upwards move compared to this upwards move was essentially doubled. This correction here compared to this correction here was essentially doubled, and then so on and so forth. Roughly speaking, obviously. So that would project, if we see this doubling here, we could potentially expect Bitcoin to start moving back up towards like 130K, 140, 150K for another local peak, likely into some sort of consolidation, whether it's sideways or upwards poised, going into August and September. So I find that really interesting. I think that these are quite clearly similar to each other. And again, we're seeing this extended duration and time of these patterns play out. Now, if we look down here, actually, I don't really have anything to go over for those. Again, I just want to point out here, if you look here at the overall bear market extension here of the Fibonacci, we've seen that we're currently sitting just right below the 1.382. What is this? So it's a 457 here, sits at around 137K. This kind of 618 zone that I have here spans from around 155K to 173K, and the 786 here, 224,000 up to the 854, around 248,000. So again, those are some values to look out for within the more reasonable range that I have given. Here at the 2-week chart, I went over this in a past video. I'm not going to spend too much time on here, but generally we're just seeing here, see the pi cycle indicator here. We see the RVI down here. We can see each of these orange price arcs that I pointed out here with an ascending support structure. But look here at the RVI, there's a descending support structure, so we see some hidden bullish divergence that so far every single time going all the way back to 2011 has indicated the bear market bottoms. And then there's also always been 2 peaks from that same beginning in time every single bull run that has indicated the end of said bull run. And we have yet to see that second peak, which is being anticipated by this yellow dot right here. So again, I am anticipating a further move. We can also see that the RVI here, this resistance has been broken as well, so that's a very good thing to be seeing. But yeah, I think this is I have a post on X about this as well, if you want to go look at that, for me to go over this a little bit more in depth, or if you just want to skim through my past videos. Also, same here over this 2-weekly chart using the accumulation distribution regarding the open interest money flow index. That's going to be this indicator down here. Generally, you can see here that these color coordinated boxes has a direct relationship with surpassing certain values here, notably these two right here on the that indicator itself, which is always indicated the peaks and the lows of the overarching bear to bull cycles, and we have yet to see the all-time high peak indicator for the current bull run, which again is leading me to the disposition towards Bitcoin has not topped out yet. Looking here at the 12-month, again, really this kind of just puts everything into the big, most macro perspective. I've kind of periodically been going over this, maybe a little bit too much, but I feel like it's very important. Initially, we see one red candle here for the bear markets. For this first segment here, we can see 4 candles for the bull market, but then it began to stabilize after 2013. We see 3 bull market candles, 3 bull market candles, and then 3 bull market candles. Yet we are currently waiting to see if, at this point, if Bitcoin stopped out at 123K, this pattern still follows through. But again, the anticipation here and the biases, which is, reasonably laid out and validated by various points of data, whether it be technical or the massive sense of positivity that exists within the fundamental landscape right now, that Bitcoin is going to continue to go higher here. It has also yet to meet the uptrend zone here, of the yearly or the 12-month chart. It goes all the way back to 2017, which creates a zone that further corroborates zones I've given in previous charts and previous videos of around 160K up to around 250K. That almost precisely corroborates if I go all the way back to that 4-day chart, that basically precisely corroborates the historical Fibonacci extension of the proximity to the 2.272 of the phase cyclical bear runs going all the way back to phase 1 of cycle 2. Again, here, this range here is 175K up to around 245K. So it's basically given the exact same range. If you look here at like the high dailies, the 4-day to the weekly corroborates what is being said on the yearly, and vice versa. Now, lastly, I want to point out the Bitcoin dominance here and kind of give a brief and general sentiment for the altcoin space. Really, obviously, altcoin season has been quote unquote delayed various times. Altcoins have been struggling against Bitcoin, even Ethereum as well. Bitcoin's been front running everything. Even Ethereum hasn't entered price discovery yet. Cardano hasn't, I think the only one, the one that I can recall that has entered a very minor degree of price discovery with a wick was Solana. But outside of that, and obviously maybe some that I'm not aware of, for the most part, the altcoin space has been lackluster. No price discovery, really. And we could potentially be seeing the first moments of this with the two, actually, I don't even know if it's 2 years. How exactly long is this? So we're looking at about 1,000 days. So it's over 2 years at this point, around 70 bars or so. This past uptrend here was around 52 bars. So this one was shorter, but here we can see that this support leading into the descending resistance, such as we're seeing here, we could potentially, again, just be seeing a recurrence of macro descending resistance. This resistance has here been initiated, and we're seeing this long-term uptrend here broken. Now, we can also see here the horizontal support to the RSI has finally been broken. It's been intact since March of 2023, so over 2 years at this point. Again, like I said, finally been broken. But some point of caution here is to realize that this drop so far is looking a lot like this one. And if I were to move this trend line here, and initially the first support was looking more something along these lines. We had this fake out drop here, and then it continued to go up, and we saw the price here basically just straddle what was support. So it does really, in my view, look like we're seeing what was support. It got lost, and then we've seen the Bitcoin dominance struggle to really cement solid support and price action back above this said trend here, which just seems to be flipping from support into resistance. But again, I mean, obviously, if I draw it back to how I originally had it, we are seeing this candle close here, which could enact as resistance, and then we obviously would see the Bitcoin dominance continue to go lower and lower. Now, lastly here, pointing out the total 3 chart again, like Ethereum, we're seeing the total 3 chart sitting right here at prior all-time highs. It is currently facing some degree of rejection here at the lower bound of this horizontal zone. At this point, obviously, these local lows need to hold at this point, which is anywhere from around like 781 billion down to around 707 billion. The best case scenario, obviously, is, and what I think is more likely than not, that we'll eventually see the breaking of this horizontal zone and then see a move up to in line with this inside pitchfork ascending channel, upwards towards anywhere from like 3.5 trillion, upwards towards like 5 trillion, potentially with some wicks, or just generally going higher up towards like here, let's see, 6.5 trillion to be somewhere around right here, 8 trillion up here. And I think at highest, depending upon how high the total market capitalization of crypto goes, including Bitcoin and Ethereum, I think we could potentially see the total 3 chart here go as high as like 8-10 trillion. That's if the absolute total market capitalization goes like somewhere towards at least like 16-20 trillion or higher. But overall, again, I just wanted to end the video with that and kind of give a brief sentiment on altcoins, and just because it's been so overdue at this point, plenty of people are getting tired. A lot of people left because of how lackluster it's been. But I think obviously with investing, it all boils down to patience, discipline, and conviction. Also understanding that the fundamentals of market is not always reflected immediately in the price. So a lot of you guys are seeing, especially with XYO, which is one of the altcoins that I emphasize here on this channel because I think it's just a revolutionary blockchain solution. I think it's going to be very big. Maybe I end up being wrong and I'll have to eat my words. Who knows? But a lot of people have been unhappy with, they're seeing their altcoins have all of these partnerships, these exchange listings, all this good fundamental news, but yet the price is remaining stagnant. It's going sideways. It's barely going up, or even it's just continuing to go down. And even, something I've been speaking about and I've shared on X recently is there's a clip of Jeff Bezos talking about this whole, really kind of, in a sense, a dichotomy between fundamentals and technicals of the price appreciation, and where you can see the fundamentals getting better and better and better, but the price is not reflecting that. It's going sideways, barely going up, or it's even going down, while everything in the fundamental landscape of the real world is getting better and better. And again, it just, like I said initially, boils down to having patience, discipline, and conviction in what you are investing in, the technology you are adopting, and really just sticking with your plan going forward. But as I said, that's all that I wanted to go over and talk about in this video. As always, none of this is meant to be financial advice, but all else gone over and said. I hope you all enjoyed, and I hope you all have a wonderful day.